Pedro asked me if I could present at 2 o'clock, but I'm in the middle of a hackathon in Argentina right now, so I had to finish something with my teammates to keep the 4 o'clock time. But I'm good to go right now.
Okay, no, that's great. That's great. You are very active, right? So, would you like to introduce yourself and start your presentation for the judges?
Yeah, absolutely. So my name is Nathaniel. I've been working the last several years in real estate finance, and a continued frustration in my line of work, both on the real estate development side, on the leasing side, and on the mortgage financing side of things, is how inept the industry seemed at really reaching majority of potential homeowners, millions of people in the country who would qualify under the right programs for financing, but did not have access to it, mostly because of unawareness and because of a lack of accessible channels to properly apply for it and get matched with the right programs that would pair with their current financial circumstances and their desires to be homeowners. So that's what spawned my knowledge of the right programs, down payment assistance programs, loan down payment, mortgage options that are mostly federally backed, sometimes state or municipally backed, and combined with the capabilities of AI to quickly analyze a variety of input user data is what led to the creation of the concept for HomeBuyer Help, which at the beginning of this month, I met Matthias and he told me I had no working MVP at the time. I have never written a line of code in my life, but I had the concept, I had the idea, I knew of vibe coding tools. I used Claude a handful of times. And he told me I don't need to recruit a CTO right now. I can build a working prototype, an MVP. If I come to Venture Miners activities and events, by the end of this month, we'll have an MVP working. And now, a day before the month is over, I finally have an MVP working. So that's what I'd like to share with you guys today. So let me share my screen.
That's amazing. Nice to hear that.
Homebuyer Help, we're great. We're now officially incorporated in as a Delaware C corp. The mission statement, the purpose of the company is to enable home ownership for millions of renters in the country who most of whom believe they do not qualify to be homeowners, but actually do. So the problem that motivated, as I was speaking to a minute ago, is that for about 2 decades now, homeownership has become less and less achievable for the average person in the United States. Each year, we see the average first time home buyer's age increase. And now it's past the year of 38. 20 years ago, it was people in their late 20s who was the average age of a first time home buyer. By the age of 40, people have already had kids. Couples have already had kids for a few years, but it takes that long now to get to the financial stability where people are able through most common mortgage channels to become homeowners. We see too in as of 2024 and in 237 cities across the country, the average starter home costs over $1 million. And most people in the country still believe that you need a 20% down payment in order to get a mortgage on a home. So in the majority of cities in the country, that's $200,000 you need to have saved up in the bank, which is entirely unachievable to almost every working family in this country, even to the people who are aware of low down payment options from the FHA, from Fannie Mae, from the US Department of Agriculture, and from the Veterans Association that have low down payment mortgage options. Even in those cases, a 3.5 to a 5.5% down payment is still 35 to 55 grand in cash that people do not have saved up. And this has only multiplied since COVID. So the solution that we've devised is a mobile first application that's directly designed to solve access and visibility by giving people direct access to the programs that are well suited for them right from their App Store or the Google Play Store. It eliminates the fragmentation in the application process that's split across different lenders, lending backers, and down payment assistance providers. And it also addresses low conversion problems because lenders still predominantly move on a very manual basis. where they require a lot of back and forth communication by email and phone and needed certain documents, instead of streamlining this process where you can actually upload all your supported documents and put in your own personal financial information right on your phone or using your phone's camera. So the product that I'm going to demo for you today, I'm actually going to drop this link in the chat. So anyone after this, feel free to give us a little test run. This is the basis of this is the MVP right here, right? From the landing page of the website or from our app, you'll be able to do this. So start very simply. Let's put our name. So let's say Matthias wanted to look at buying a home, right? First time, yes, he's 18, intending to buy. Gross monthly income. Let's assume the applicant makes a little less than 60 grand a year, right? Gross monthly income approximately 5,800. Total monthly debts, let's say credit card minimum payments of $350, right? Because our credit score it's not very good, right? Really should be a bit better. So what do we qualify for under the FHA first time home buyer loan program matched with down payment assistance to eliminate the need for a down payment? Well, clearly it's actually possibly a little bit higher than this based off of some additional compensating factors, but most likely you can buy a home for $0 down between $223,000 and $243,000 with an estimated monthly payment of $2,136. That's akin to what people are paying right now in rent each month. That could instead be paid as a monthly payment on a 30-year fixed rate mortgage. Now, pivoting back over. So this is the product that we have created. That is the initial step that users will see. This is a immediate small win or indication, an accurate one of what they will qualify for. The next steps, they then press to continue, and they're asked a survey of more detailed questions about their financial status, about their monthly income, their form of income, whether it's through their pensioner, whether it's W-2 income, whether they're self-employed, whether it's the 1099 and contractual basis. And then after answering those questions, you can then get a more detailed breakdown of what you are pre-qualified for. Again, for $0 down payment options. Following that, the third and final step is then to upload the supporting documents. So it'll ask you specifically to go to your bank app, download the last 12 months of statements, upload those. If you have in paper form or in PDF form, your tax returns for the last 3 years, it will ask for those. You can attach them via email or through the web app. You can also scan them with your phone camera as well. And then any other supporting documents that will be required. It can link in-app to Experian to automatically generate or connect to your credit report. And this then gives a determined pre-qualification for what exactly you will qualify for. It will be based off of where you're trying to buy, your income details, etc. The screen that I just showed you, and based off of the input, the 4 questions that we answered, this is an indicative pre-qualification, so not a guarantee, what we just saw. But it is more than 90% accurate based off of the FHA underwriting methodology. The output that comes after the second phase, the second step, once you put in all the more detailed questions, detailed answers, that is a pre-qualification. So too is what you get after the third stage where you upload the supporting documents. That is simply done to verify the input data you put in during the survey questionnaire part. So why this design? Why this format? Well, it's an AI native platform. This will be able to plug into the APIs of lenders and down payment providers, as well as federal and municipal housing agencies, including Fannie Mae's desktop underwriter API. It is also a unified borrower flow. We've seen the user-facing side of it. The other side of it, which will be a simple intake dashboard, will be that which a lender and a down payment assistance provider has the interface of. And they receive individual applications and all client data right there. And they will then, after the third phase where the documents are uploaded, once you have put in all the information you need, you are then asked a simple question. We have pre-qualified you for this. Here's the full details. Under Fairway Mortgages as the senior mortgage provider under the FHA program, and under Chenoa Fund as the down payment assistance provider. Would you like us to connect you with them and share your information? And we'll also, of course, give the necessary legal disclaimers expressing how your data and information is protected. You press yes, that is then sent through the interface to the lender and the down payment assistance provider, who will then connect with you and see it through to close. HomeBuyer Help, therefore, functions as the mortgage broker in the application process. We do the origination of the borrower, we then do the intake, and then we do the handover to the lender. And through any further communication that is needed between lender and borrower, we help facilitate and can be reached out to by either side throughout that. Mortgage brokerage is not a new industry. This is a actually heavily outdated traditional legacy industry. But the good side of that, our revenue model is easily protected and is already solidified. A 1% industry standard fee for on every loan closed that began with an application through the app. This not only goes for the senior down payment, which under the FHA program, which is what we're focusing on exclusively during the MVP, that is a 96.5% leverage mortgage. That's 96.5, 1% of the 96.5%. Okay. And then further incentives from the down payment assistance providers. I mentioned Chenoa Fund. They're a nationwide down payment provider who specifically works with FHA loans and Fannie Mae loans, who we're in communication with right now to collaborate with. And additionally, through referral systems with real estate agents, with home builders like D.R. Horton, the largest home builder in the country, who we're in communication with right now about referring people to us for applicants to buy their homes who don't quite qualify for standard mortgages. So building the right commercial and public partnerships, the other one being with municipal housing agencies. We have a upcoming meeting in a couple of weeks with the New York City Department of Housing Preservation and Development about supporting the app to promote homeownership, and especially in lower income areas in New York City. This is the largest municipal housing agency in the country. And so we're looking to develop public, nonprofit, community, and municipal government organizational relationships, as well as commercial partnerships to drive outreach and access. Quick financial snapshot here. If we're closing 1,000 loans on average in a year, at the average first-time home buyer price of $285,000, that is a nationwide average, rural and urban combined, gives us an annual revenue of $2.85 million. If we're able to reach just 1/4 of what Rocket Mortgage closes in a year, they close over 400,000 loans in a year. We're able to hit 1/4 penetration of that, which is 100,000. That's an average revenue for the company of $285 million. And it is an AI forward company. Naturally, the EBITDA margin is extremely high, which by our projections now would translate to approximately 185 million in bottom line earnings. So that's the premise of the business model and the base function of the app. Again, this is an MVP version you saw, but we do intend to be on the App Store by the end of the year. I guess I'll open it up for questions right now. Please let me know your thoughts, feedbacks, or anything that was unclear.
Let me add the banner. So if you want to test out, this is the link. We invite all of the judges so that they can ask you the questions directly. Thank you for pitching the project, Nathaniel. I'm waiting for my house that you thought that you would get me for free, but to let the judges go first, then I ask you for the house.
I can go first. I had some clarifying questions. So is this mostly for FHA loans, or is this across the board for conventional loans as well?
So the MVP is exclusively for the FHA first-time home buyer program, which is a 3.5% down payment program. The later iterations will also include Fannie Mae's first-time home buyer mortgage, as well as Fannie Mae and FHA refinance options and some other programs they have, as well as the USDA's home buyer program, which is for rural areas only, which again is 80% of the country. But that is another program we'll incorporate, as well as the USVA. So anyone who's U.S. veteran or family member of a veteran applies to. It will not be for typical private mortgages because those do follow the 20% down payment rule. And the purpose of the app here is not merely to compete with existing mortgage providers or even the kind of more forward solutions like Rocket Mortgage, but rather to activate approximately 25 million more people who are renters in this country who would not qualify for a private mortgage, but would qualify for a low down payment mortgage combined with down payment assistance that matched.
Got it. Got it. Thank you for the clarification. So this kind of directly leads me to the next question. Is there any other player here in the space? I mean, obviously, I know about Rocket Mortgage, and you referenced that as well. But I'm curious if there are other players, if there's like that are doing this, even if they're not AI forward.
So the Web 2 versions are rocketmortgagebetter.com is another one, and there's a couple others like it that have been able to reach some new market penetration by making it web-based, app-based, etc. However, no one has specifically tried to target people who do not otherwise qualify, and zero solutions anywhere in the market also combine you with down payment assistance. That is the component, the layer that eliminates that goes from a relatively small down payment, which again is still more than 30 grand in most cases. It goes from a low down payment to no down payment. And especially post COVID, families and people's personal savings is what is depleted more than anything else, more than people's credit scores, more than their earnings or debt to income ratios.
Got it. Got it. Yeah, I think that is super helpful. And then I'll ask one last question, and I'll let someone else ask. Can you talk about, like, I know you talked about partnerships, but can you talk about like how much you're looking to raise in your seed round, and then like I guess, like, where do you plan to invest? Is this, I do see the Vercel app, like, is this mostly front end? Do you need to like do more integrations? Is this like more a tech build for the seed round investment, or is it more like partnerships and getting all of the structures in place in order to be able to service this I guess, like, these goals?
That's a great question. So the partnerships do not cost much money to develop. The the raise we're looking to do for a seed round is an $800,000 seed round that will see us through not only launch of the app and being public, it will also see us through the acquisition of mortgage brokerage licenses, which has to be done on a state by state level. Granted, we will do multiple at once, starting with high ticket or high priority states. So New York, Texas, Florida, California, as well as Arizona and Georgia, because those states have specifically very fast track mortgage brokerage application processes. In the interim, we have identified and begun outreach to existing mortgage brokerage companies who are active in multiple states through a joint venture with whom we are able to operate under their license until we acquire our own. So that cuts down the time frame from when we can actually be rolled out and revenue generating. That cuts it down substantially. So the use of funds is primarily for hiring the base team, right? And I've been going to actually 3 weeks ago was the first hackathon I participated in. Matthias put it on an afternoon in Midtown. And since then, I've been going to a handful, and I've made some very close relationships with some back end developers and full stack as well, especially some who have my teammate Natalia, who's based in Ecuador, who I'm working with this weekend, was also at the Global Hackathon 2 weeks ago. We built something there. She's a cryptography expert with knowledge of how to use zero knowledge proofs, a Web3, very forward-thinking cryptography component that protects users' data and information, because all of this data falls under personally identifiable information, PII, which is heavily federally regulated as far as how it's handled. So we've built out I built out exactly who the team is, but as of now, we're all still working on other projects or full time in our employment because bills need to be paid essentially. So the use of funds is primarily for acquisition of mortgage brokerage applications or mortgage brokerage licenses, I mean, and for doing the tech build and core team salaries. That is the entire cost to get us not only on the app stores and live, but also revenue generating. We do not intend to do a Series A until we have at least 6 months of revenue generation to prove the margins, not only the EBITDA margin, but also the rate of intake. That if we then expand out marketing and public promotion, not just on online and social media ads and such, but through core partnerships with local governments, nonprofit housing organizations, as well as the commercial partnerships like with nationwide home builders.
Very cool. Thank you so much.
Yeah.
Absolutely.
I can go next, man. And maybe Shira has already sort of covered a lot of questions I had. So just for your seeding round, basically, I was just wondering, like, let's say you get approved for that specific investment. For your go-to market plan, how do you want to start targeting folks to kind of onboard people to your platform? And again, in order to generate revenue, how do you think about the business model? And in order to achieve that margin goal you have, basically, what are the like roadmap or the plans you have in your mind? Just wanted to get a perspective on that.
Yeah, absolutely. So this month we built the MVP. Next month, by the end of September, we will be conducting our alpha test. So you'll be able to see in the next couple of days, you can go to homebuyerhelp.ai and be able to put in your email there to pre-register to participate in the alpha. So as soon as we go live in the alpha testing, anyone who's pre-registered will basically fill out the survey, go through the process, and then get connected with the lenders and down payment assistance providers that we have onboarded for participation in our alpha. This is so we will not be earning any fees. This will be a free revenue, free lead gen service as far as the lenders are concerned. But this is where we're doing validation of concept. This will be done by the end of September. So right now I've been building out relationships with some social media platforms that are focused on financial education for working people and average individuals, and as well as some community and nonprofit organizations that are specifically oriented towards housing affordability, and also ones that are working to prevent and eliminate neighborhood displacement, especially as rent and housing costs rise. And this is happening in cities, not just in primary cities like here in New York, but in even secondary and tertiary markets around the country. So these are the partnerships, and again, municipal housing agencies like the New York HPD. These organizations have direct public access promotional channels to reach really into the communities that they serve and operate in. So these are the promotion channels we're intending to activate. We're doing the micro version 2. We intend to have no less than 10,000 participants in our alpha. And then that will be shortly followed by a quick beta, which will be a little bit more advanced and including the document upload component to it. And then as soon as the beta is done, we will then be going live on the App Store. By that point, we will have the partnerships with existing mortgage brokerage firms active, so we're able to operate and charge the mortgage brokerage fee. To your question about the business model, it is already industry standard. Just as when you buy a home, the agent or broker their brokerage fee is wrapped into the purchase price of the house. The mortgage broker's fee is already wrapped into the closing cost of the loan. So it's essentially funded by the lender, and then it's part of the mortgage, right? But it's industry standard 1% of the mortgage cost. So that is our top line revenue. There is some ancillary revenue through anonymizing this very high value data on a large scale, because it's personal financial data combined with intention to buy. And often that is also included with people relocating, people moving from New York down to Florida to buy a home, or the Carolinas, people moving from California to Texas, combined with their actual financial data. That is the ancillary revenue there from secondary data set.
Got it. Perfect. Thank you so much for all the insights. I love it. Yeah.
My pleasure.
I'll go next. Thank you for Shira and Avinash. I think you guys cover most of the questions, so I'd like to go for another part. When it comes to the legacy industry, such as like mortgage or finance, there will be always be concern about like trust, not only in terms of like security or like a currency, but also like cultural alignment. How do you plan to build trust so people actually use this tool and for as a like first step?
That's a great question and something we've really done a lot of social engineering to try to account for. Our target user is the 25-year-old remote worker who lives in Bushwick, and it's the 65-year-old single woman whose kids are grown now, who has never graduated high school and lives in rural Nebraska. These are both our intended user. So very different messaging is often needed because one wants the first one, I'm using extreme examples trying to make the point clear here. That first user, they want to know, wow, I can completely change my financial circumstance. My net worth overnight can entirely change. And I'm now a homeowner instead of being stuck in a rent trap, not knowing if my rent's going to go up next year, especially depending on what the rent protection laws are where they live. The other wants, I'm putting out personal information. I'm putting up my social security number and my income. I don't, this is just on my phone. I'm major hesitation comes up there, right? And also, we got to account for linguistic differences as well. So, in the UI, in the interactiveness, the structure of the app was designed from the beginning to calmly walk you through what is perceived by most people to be a complex financial process that they know very little about. This is the TurboTax, but for getting a mortgage, right? It's accessible. We deliberately are designing the UI to be, include teal and off-white colors that supposed to invoke a sense of calm, a simple step-by-step process where you simply answer questions one at a time and it guides you along the track without asking too much at once. That's the intention there. The other and much more important to that, the point of trust, is how do people come to find out about it? This is where actually boots on the ground relationships with existing community housing agencies and nonprofit orgs comes really into play. If you were referred to this by the local community organization that works with your neighbors to help them with their needs, then you're much more likely to trust if they say, this app is great, your data is protected. This is will actually walk you through the process. So that the way in which you heard about it is also, it plays not only into getting outreach, but into building an actual trust among the users. Even for people who are applying to buy a home by, I mentioned the nationwide home builders a couple of times. D.R. Horton is the one we're in communication with right now. The others are like Ryan Homes, KB Homes, K Hope Nanny, and these are all companies that I've worked with in the past, so I have connections or relationships with them. So this is very something they're very interested in doing. People apply to buy their homes in a new development they've built. They're trying to sell 400 houses at a time. People apply, put in their financial information, etc. They have a mortgage arm to each of these companies because their incentive is to help people buy their homes. If people don't qualify, these are still private mortgages. If they can simply refer that user who didn't qualify, refer them to our app and refer to us as a partner, then they're more likely to sell that home because we can qualify for people for mortgage options that they cannot. And that also too, anyone who is referred in that format is more likely to trust the app. Why? Because it's the same company you're buying your home from directly facilitated towards this, right? And I'd say the third and final point on trust is the perception, the branding, the public perception of the company itself, right? And this is part of why we're taking such a very serious assessment of the security components from the beginning. Something that would kill this early on would be a leak of data, right? And there's too many vibe coded product examples that we've seen that happen. You know, they start going off and then suddenly it gets hacked, it gets leaked, the back end falls out. We're preventing that from the beginning by instituting beyond industry standard encryption levels, but actually instituting new Web3 solutions like zero knowledge proofs that locally store your data, encrypt it, and then store the parsed encryption keys on a distributed node system on the blockchain, right? So likely via Walrus or Filecoin are probably the solutions we're looking at. But the public perception, this is part of why, even though this is a very highly monetized fintech solution, much more highly directly monetized than most companies in the fintech space, this is really driven by solving a real problem, and so working in a very interactive way with our users. That's how the trust and the brand image is developed and maintained.
Gotcha. Thank you for the answer. Thank you.
Hi. Thank you for your presentation. And I have a question. So basically, your revenue mostly come from lender, right? So the lenders, why they really wanna so basically what you're doing for lenders, you're simply helping them for acting as an advertisement for them. Basically help them to get a customer, right? Because in my understanding, like you pre-approval, the whole analysis of yours cannot really be used for them, because your analysis is more like a screening, not an actual calculation. It's kind of like a general calculation, but it's cannot be really used in the business or production level. So basically, what you are doing for them is just an advertisement. So for advertisement,
I'm glad you.
So I'm saying, like, if only for advertisement.
I'm sorry, there was a delay. I didn't realize you.
The internet has some problem with that, I think. So I'm saying that if you're only doing advertisement, are they really willing to pay 1% of each loan that you help them for the advertisement? Like, yeah, that's the question.
Okay. No, I'm glad you brought this up. Like, it's important to scrutinize the core of the business model here. So firstly, this is already an industry standard format. This is what mortgage brokerage companies do. Just most of them are not doing it in a digital format. They're doing it in a very traditional brick and mortar format, right? And to answer your question though, yes, they absolutely are, because we're not advertising for them. We're originating direct clients that were already pre-qualified. The demo that I showed you is just the initial 4 questions that gives the user an indicative answer, like you will fall in this range. That is not the real process. The real process begins in the next step. It says when you click continue, and then you have to fill out what was your income the last several years, what's your type of employment, break down the details of that monthly debt payments you actually make, what minimum credit cards do you have a car note, all of these things. What is your credit score? You know, not just to click a range. You need to actually connect it to experience so this can be verified. The demo that I showed you, that number is actually calculated based off of the underwriting methodology of the FHA First Time Homebuyer Program. So that those figures are accurate, and they're the same figures that the lender and down payment assistance provider will also arrive at. But the real pre-qualification comes at the end of step 2, which is when you fill out all your further information, the real details. The purpose of the initial, oh, you qualify for this area, is because users will more likely be off-put if they have to go in and answer 25 questions with a whole bunch of personal financial data before they get any indication if this is going to do something for them. It's more like structured to be an early win, if you will, and also an incentive to then see the application process through. Once we have the third step, which again will be done during the beta testing, where you actually upload the supporting documents, we're eliminating all of the work that the lender has to do. Their loan officers would rather be sitting in front of the spreadsheet and working on their own, within their own underwriting API, to confirm the details that we provide them, rather than calling up applicants and say, okay, we got your tax return for this year, but we didn't get it for last year. Okay, your tax return is a joint one with your spouse right now, but you're representing your income as being separate, and talk them through the details of all the additional documentation they'll have to provide. Because you're not a W-2, we'll need to you're a 1099, we'll actually need to see your bank account statements for the last 2 years to verify this, etc. That's not something that lenders want to be paying their loan officers to do, and it's not something loan officers want to be doing. So they're absolutely willing to pay a mortgage brokerage fee for those services that whole process being eliminated. We also don't bring them anybody who doesn't pre-qualify. If somebody's debt to income ratio is too high and their monthly income is too low, they won't qualify for something, or they'll qualify for a smaller loan amount that you can't practically buy a home with, in which case we're not connecting them with a lender. So we're saving them an enormous amount of time and resources, especially because their channels for origination and pre-qualification are primarily very, very outdated and fragmented, while ours is streamlined and automated. And lastly, the mortgage brokerage fee is technically paid by the lender because it's part of the mortgage and the mortgage closing costs. However, it's provided as a debt, right? So the borrower is the one really paying it off. The lender pays us, and then the borrower pays the lender back for our fee as well as the mortgage itself through the course of the mortgage. So the lender's not really coming out of pocket. They're coming out of pocket in the same way they are with the mortgage, which they'll be paid back for with interest. So does that clarify?
Yeah. Thank you for answering. And also, I'm very curious about like how you're gonna code start the whole process, because it's basically two sides, right? One side you need to reach out to lender, and another side you need to reach out to the customer. So this code start is gonna take like a huge effort because you need to reach out for both sides. So I'm kind of curious if you which side you're gonna start with, or you're gonna start with the both side. Yeah, I'm just asking.
No, great question. So solutions like Better.com and Rocket Mortgage, they're connected with thousands of lenders across the country. Our process does not need to do that because we're not searching every possible lender out there and optimizing it for the best solution for you. We're taking a federally backed program which has specific underwriting criteria determined by the federal agency behind it. So the FHA has the underwriting methodology. Lenders can have their own particular nuances to it, but they're very minor. For example, some lenders will want a higher a lower debt to income ratio for somebody buying in a rural area. Some lenders will be a little less lenient on a low credit score, affecting the interest rate. But these are very minor nuances on a lender specific basis. The actual underwriting methodology itself is determined by the federal agency or by the FHA in the case of our MVP. So we don't need to build out onboard hundreds of lenders. We really only need about 2 nationwide lenders and 2 down payment assistance programs, which we have already identified and are initiating outreach to in this next week, for participation in our alpha. We did a thorough assessment of nationwide lenders who are active under the FHA program and who are specifically have been very tech forward as far as partnerships and integrations they've done. So Fairway is the first one that we're going to be reaching out to, and on the down payment assistance side, it'll be Chenoa Fund, who we have had contact with before. So the primary outreach is focused on the user side, but we do need to lock in the first lender and down payment assistance provider.
Okay, thank you for answering.
Absolutely.
Amazing. So Nathaniel, when are you going to get me my 0 down payment housing again? I'm waiting for that, bro.
Yeah, my pleasure.
Congratulations for participating today. Thank all the judges for the amazing questions. That closes for today. Thank you again, Donna, Michael, Shira, also all of the other judges that participated before. Thank you again, Nathaniel, for pitching. You are killing it, brother. Hackathons coming here, vibe coding all the way down. I hope you get the success very soon. That's it for today. We're going to wrap up. I would like to thank you, everyone. If you're watching through this video through 3 hours and 40 minutes, congratulations. You should receive a prize at the end. And as I said in the beginning, we're going to try and do that every month now. So maybe September, late September, October, we're going to have more of those pitch events. So stay tuned. Subscribe for Venture Pointer calendar. Enter in your artisan page, vote for your favorite projects. If you want to support the initiative, make a donation there, and let's keep vibing. Because for eligibility, you need to be part of this fund. You need to be part of this community. Okay, of course, need to be vibe coded. Need to embody the spirit of vibe coding itself. Need to show a working prototype. All of that is important, but need to be part of the community. So you come here, pitch your project. We still have a few slots for today, okay? So if you're watching this Vibe Pitch Day of luma.com/Vibe Pitch 2, there are a few slots that you can grab here. And you just need to fill up this project pitch application. Even if you don't have your project in Artisan, okay, you can submit it very quickly. In 5 minutes or so, you can submit, and then you can come here, present. Venture Miner Funds for Vibe Coder. It's a grant fund where we give all of these projects match funding opportunities. If they are created, if they are voted well enough and you're in the top, they can get approved for receiving match funding. In this season 5, we have 5 amazing projects that were created, and they are raising and getting revenue or like more than $30,000, $20,000, $5,000, $7,000 plus matching plus prizes. This is a great platform to fund vibe coders like you. And people, let me do a very important highlight here. These projects are non-technical, okay? These projects came from common people, common creators like you that are not super software engineers. Maybe they have 1 or 2 devs, but most of these projects, they use AI, generative AI for coding that we're calling vibe coding, and they can go to market. They can start making sales. They can even raise capital. Okay, so this is possible. This fund is closed for outsiders, so only community members can come. So for you to join the community, you need to attend to one of our free bootcamps, workshops, meetups. So you need to come here, pitch your project, submitting the form. We have this form for project application. So if you want to come, apply your project and pitch,